So good morning, active traders, and welcome to our live Trading Week Ahead broadcast. I'm Ken Calhoun, your host, president of the original Day Trading University and Trade Mastery going back to the late 90s. So it's great to see so many of you here. Markets are on fire, aren't they? What wild markets we've had, taking out new highs yesterday. Now, typically, big picture, there will likely be at least one, if not two, red days next week. So you don't want to go long. I personally never like buying all-time highs. ATHs are notoriously frothy, and frequently you'll get the false breakout and then unexpected by less experienced people pull back or crash or correction. So as long as the market keeps going up, we go long, right? But in the back of your mind, play it tight with careful stops. If you take a look at the VIX, one thing, it spiked up a couple of times last week, Tuesday, Thursday, ran all the way to 21. You can see the VIX is currently hovering just near 16. Do pay attention to see if it does get another breakout above that 18 and then again the 20 level. And as long as the market stays under 18, full steam ahead, bulls have the lead and the market continues on up. But if and when the VIX flips back over 18, and if it holds, here's the brighter downer. If the volatility index breaks over the 20 mark and holds over there for 2 or more days, then you have a small start of a correction. So as long as the VIX spikes up and back down again, it's still a bull market. But if it spikes up and holds, like a foothold, and climbs up over the 18, and climbs up over 20, and stays over there for 2 or 3 or more days, and 2 days or longer, that would be a cautionary sign and would tell, at least it tells me, to tighten up trailing stops on all my winning long swing trades. So moving on, very likely, as we do today's session, I'm going to try and blaze through these charts relatively quickly. I may not stick around the whole half hour, but I will if you guys have questions or if you have charts of your choice. So now is a good time to type in the ticker limit 3 per person, 3 tickers per person. Don't be that person that has about 15 stocks, but if you have 1 or 2 or 3 stocks or ETFs you'd like me to pull up, type in the ticker, and if it's a day trade, annotate that, and I'll use the day trading charts for those. Otherwise, we'll use these swing trading charts. Anyway, my best swing trade exit of the year was selling near 38 on this guy. I got in on an average cost basis just under 30, building the position, and I sold at 38, and that was probably my best exit. Now that's obviously big bearish upper shadow. The reason I mentioned this chart is I'm looking to rebuy over 30, and I'm going to go long in Smith & Wesson, locked and load. If we get over 30.3, 30.5, something like that, up in the weekend. Who can tell me what pattern this is? Big picture, what's the last 3 weeks of, last 2.5 weeks of the Smith & Wesson pattern forming? If you want to be a successful trader, you need to know how to manage risk appropriately. Second, a close second to that is you need to know which patterns are most likely to work out and trade them in context of large range charts. Wide, clean charts are the easiest to trade. Choppy, what I call caterpillar charts, are just not to be confused with the company, which is a great company, but a fuzzy chart that has whiskers and up and down and not straight up and moving strongly is not a good candidate. Charts like this are great to trade. Let's see this one. Wow, a bunch of tickers. Wow. Oh, thanks, Brian. A brush cut. Okay, I'll try that, man. For groups, I got Led Zeppelin and Pink Floyd. Okay, 2 of my favorites. I remember Led Zeppelin. Don't play Stairway. Anyway, this is a mean reversion pivot where it runs up, it pulls back down to just about exactly the middle, runs up, pulls back down the middle, and then boom, shakalaka. It goes back up again. So whenever a big range chart, say something went from 20 to 40, comes back down to the midpoint at 30, maybe worth a shot north of 30. So keep an eye on Smith & Wesson locked and loaded next week. I'm going to go through the next charts much quicker because I'm not noted for my patience. I'm a day trader. It's occupational hazard. I trade as much as 50, 60 trades daily, thousands a year. So I'm I do what a colleague, the brilliant Sosnov, says, trade small, trade often. I completely agree with what he says. I used to say trade wide, not deep, but he says it better. But the point is, throw a lot of darts at things that are running with specific entry signals once you know how to trade them. Anyway, Virgin Galactic did really good. It gapped up a couple of weeks back. It's been holding steady here. Because of the large green candle days, like Thursday was a really big day. It's a $10 day for SPCE, and I nailed the calls for members. I haven't been posting the updated charts of the day lately because I've been busy, but we've had many of them, of which this is one of our favorites. SPCE was really good Thursday, especially. Some of these are charts that you folks had mentioned over the last week or two. Let's take a look, shall we? Which ones worked out the best? NSA looks perfect, right? Perfect. 45-degree angle breakout, a little pullback, large green candle on the right side of the cup right here. And it's all green and good looking. So NSA's a buy over the 53. Bum, 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 bum. Because it's a 45-degree angle run, which is the strongest breakout. Do be sure to get a book by my colleague Harry Boxer, Profitable Day in Swing Trading. He is the other greatest breakout trader I've seen in my life. And he's legendary. His book is really good. Anyway, and he and I like strong charts, so that's good. Anyway, so Boxer's book called Profitable Day in Swing Trading, available at Amazon. Highly recommended. One of my favorite all-time trading books. Anyway, NSA, I shit you not, it's a great book. Anyway, 42 to 52 on this guy. It's got a good directional breakout. Play with it over 53. Don't play with your food, but play with your stocks by buying new highs and scaling in when successful. When unsuccessful, how do you manage exits? Okay, let's quick audience interaction portion of this morning's presentation. If we buy NSA over 53, I don't even know the name of this company. I'm a trader. I don't need to know the name of the company. I don't, maybe peripherally, it would be helpful to know what sector it's in, but that's not important. All that matters is price action. If it goes up, I buy. If it goes down, I sell. It doesn't have to be rocket science. But if we do buy over 53, and let's say it's one of those that doesn't work out and it starts to go back down. Let's say I buy at 53.5. So let's say I buy 53.5. Where would a stop loss be on a $50 stock like that for a swing trade? Where would your stop loss be? This is the time where you type in quickly in the next 5 or 10 seconds a price. There's no right or wrong answer. There's just difference, and that's what makes trading wonderful. Is we're all trading slightly differently. Where'd you stop be on that? Let's see how you on 50.5, 2x ATR. That's good, Doug. That'll play. That's actually really brilliant too. Range-based trading is critical, and one of my smart traders, Doug, said 2 times the average true range. And that's absolutely, positively, 100% correct. Use range-based trading, but unless, like say, the most recent ATR is like a 10-point range, like on Virgin Galactic, you will not use a $20 stop on that. But in general, things like that's a smart way to think. Twice the average daily range, a loss of that would be the place to capitulate on a swing trade. That's absolutely correct. That's smart. That's hats off to you, sir. I've never seen anyone post that, but that's a smart answer. What numbers do we have here? 53.5, 50, 2-day low. Right. All good answers. I would use no lower than 51. So if I buy 53.5, in general for stocks in the $30, $40, $50 share range, you want to use $2 stop loss or a loss of the 2-day aggregate low, whichever occurs first. Or as a general rule of thumb, like Doug mentioned, 2x ATR makes perfect sense. If the average true range didn't suddenly blow out of the water like SPC did on a $10 range on Thursday, you would not be using the at that time ATR. So that's a caveat, but it's brilliant thinking though. The day's range sets the kind of Darvis box approach for box trading range. Anyway, really good chart, NSA. Got a lot more to cover, so we'll go on this. WTI, the range is great. I like the green pivot candle off the 420. So not really a pivot candle. Well, actually it is because it held the 50 SMA. So it is a pivot off the 50 SMA. For cheap stock traders, WTI may be worth a shot. And what about this guy, DEN? It went up until it didn't. With the other charts out there to trade, I would not trade this one. Though it looked great, it's like, hey, wake me if it gets over 82. But until then, we'll take a pass because it's in pullback territory. Pullbacks are usually stupid to buy. What you want to, well, depending on the chart. If it's a nice, clean, tight, continuous chart like this, then yeah, you might want to go for a little pullback bounce play. But overall, you just want to play the gap breakout continuation runs. JYNT, this chart looks perfect, right? This is from you folks. These are some of your folks' collective picks. I prefer charts down in the $20, $30 share range, but those of you who trade the pricier charts, these are perfect, right? By the way, this illustrates why I'm a big proponent of swing trading charts. I don't like ones this expensive, but ones that have this kind of a pattern that are 30, 40 bucks a share, because they tend to be much more consistent than the cheap under $10 pop and drop stocks. Those are all over the map, and those are, you just get into trouble with those. Like dating women you meet at nightclubs. You just get in trouble with those. It may look good on the surface, but deep down, not so much. So just say no, stop the madness. Trade great charts like this guy. What's this guy? CVA, Charlie Victor Alpha. You can see it's got an ascending triangle pattern or a pennant, an up-looking wedge. I'd mentioned that last week, and I'll stand behind that. It's a good-looking little wedge up there. I wouldn't go long until it breaks over the 1850, though, right? We don't ever buy the obvious high. A really stupid place to buy this would be 1810, you know, right above the current high. Just waiting to rear to get into it, and then does a false breakout, comes back down to 17, you get stopped out, and then it runs up to 22 without you, right? Been there, done that, got the t-shirt. What I learned was use a false breakout filter above the high, and I teach how to do that and much more in terms of professional trading strategies in my live room 5 days a week. And if you're not yet a live room member, for those of you live room members, you saw how great our alerts work, right? For those of you not yet members, try it out. Money back guarantee on the trial if you want to try that. It's only 29 bucks. I've been running a special for that a while ago. Do join Trading Open Live Room, a really good community. What I like about running the room is you folks, the people who are there as members, because they often make the trading day much more productive because they post really good tickers, and we go through our charts live with specific entries and exits in each session. The way we do that, just so you know, something unheard of in the trading industry, an industry first, is the answer key that I post each day. So I post trigger points for the hottest charts, whatever they are, and live real time. For example, CARV, I called along at 3640, and before it got there, I said, hey, we go long if it gets over 3640. Once it goes over that trigger point, the entry, it's considered in play. What's the most important thing that I teach is not so much the entries. I mean, those are great and important, but the exits are more valuable, right? For example, Carve, I called along at 36.4 out of 38.7. Look at the daily on that. I called it long at 36.4, and it did a little halt, and then it ran up here and started to pull back, and I said, let's sell it all here at 38.7. That exit call was more important than the entry, right? The entry was great. 36.4 was good. It ran to 42. So it ran 5 points, which is wonderful. But that doesn't do you a whole lot of good if you don't know when to sell. So knowing when to sell as well as when to buy is critical intel that you don't see out there in the industry. And that's because it's my assertion that most of the educators can't trade their way out of a paper bag. Most of them are BSers and don't even really trade like I do. So they can't teach you because they don't know how to exit their trades because they don't have the experience. I've got the experience. That's the yin yang. I'm total pro experience at this. So getting my members the exit calls is a critical piece of intel for the sit rep after it runs up. Before tangos are inbound, we're on Overwatch. We're going to get clear before field of fire comes in and mows it down. And sure enough, what goes up in day trading almost always goes back down again. So you need to know both sides of the equation, where to go in, and once it starts to pull back enough to make you concerned, as sell to lock in a profit before it comes back down to your entry. That's a critical skill that you'll learn with me exclusively at Trading Open as a live room member. And you get these alerts every single day for 5 days a week. So yet another reason why the room has been so popular, because other people out there, they don't even tell their members where to get in, much less where to get out. They just say, oh, it's going up, let's trade it. It's going back down, maybe we shouldn't have traded it. Don't go out like that. Learn from somebody who actually knows how to trade. which is me. Now this is a good example of a potential pivot play. This is my favorite pivot setup in the book, is a gap up that sells down to the prior day's high and then bounces. Now this guy didn't bounce too much. There's a great 70s funk song called More Bounce to the Ounce. It's a great song and I like listening to it and playing along with it with tenor sax. But the point is, this guy bounced, but not significantly. Next week though, the exit target on this would be what? A mean reversion pivot. Where would be the 50% / mean reversion exit target on this guy, roughly? Just eyeballing the chart. About what dollar range? If we go long over 6 on Monday or Tuesday, and it races up either intraday or for day after day, but preferably intraday, where would the mean reversion pivot exit target be? This guy started the day off as high as 14 yesterday. It got crushed all the way down to 5. Now, in general, I don't like charts like this as a rule of thumb, because I prefer charts that are going up. But when they have an extreme drop, like it got cut in half and then some, almost cut in third, that's something to play with, right? Surely everybody who bought at 13 and 14 wasn't completely wrong, but they were yesterday. Next week, though, where would your exit target be? Anybody? I'd use right near this 9 to 10 range, right? 10 would be the most optimistic case, so I'm not optimistic, I'm a pessimist, because 850 is the previous little congestion top there. That would be a conservative exit target right where I'm pointing. And I think one of you got that. Hey, Mick got it. Why am I not surprised? Smart guy. Anyway, good call, sir. Yeah, 840, right under and the reason is because it's right under that little ledge that'll have most of us who know how to trade sell into resistance. You always sell before you get into resistance, or at least tighten up your trailing stop. So the playbook on this would be long somewhere north of the whole number 6 and as high as 8 or even 840 or so. And the reason is right there. So that would be the window. If you're playing pivots, and it took me many years to learn this, you don't fool around with stuff that's under the previous day's out chart. Say this guy were dinking around down at $2.50 or $2, would be junk. What you want is something that's above the previous day's high, that gets distressed, comes down to key support level and pivots. That's the playbook for if you play pivots. Like, aha, nobody told me that. It took me many years and many thousands of trades to figure that out. Trying to bottom fish for many years, mostly unsuccessfully bottom fishing. Breakouts are better than pivots. If you do play pivots, this is a good example, one that you may want to keep on the radar for next week. What else do we have here? AMC was hot Thursday, not so much Friday. This illustrates what I told my traders to be cautious about for this guy, was that after a big range day, you usually get a small day. After a wide candle day, you usually get a flatter day. Often a mean reversion or a stall day like this. So what that means to you as a trader is when you see an outstanding breakout chart, say yesterday, don't get all excited about it today. And that's what I told my traders about this thing on Friday. It wasn't likely to run too much. But it is in play, say, for Monday or Tuesday. So kind of alternate days. If you have a big range day, you often get a flat day, maybe another flat day, and then another big range day. So keep this on the radar Monday, Tuesday, AMC, a meme stock. Virgin Galactic with its old $10 run on Thursday. And I told my traders yesterday, same thing. After a big range day, you're likely to get a compressed range day. And that's exactly what happened, right? See, these patterns repeat themselves. And what you need to do as a trader to be responsible, to be professional, to be intelligent, to be risk averse, is to memorize these patterns and trade accordingly. So for example, for the rest of your life as a trader, I don't want you to trade much after big range days. Wait instead for the day after. So this may be a good play on Monday or Tuesday, but I told traders yesterday, given the run on Thursday, which I nailed the call on SPC, I forgot where it was, somewhere in the 45, 46 long region, ran over to 52. Alternate large days and flat days. Apple, I called along right here. I think it was 144.30, something like that. I ran up $1. This is a good example of a 2-day high breakout, one of my favorite breakout patterns. For more, look at my stocks and commodities award-winning articles at traders.com. Anyway, that's a bullish cut breakout. And I've got an article due this weekend too, so I gotta write yet another article, and I'm always thrilled to be able to contribute and try and help share some lessons learned. Anyways, what do we got? So anyway, notice please the consolidation right, in this case favorable because it's above the previous day's high, so that's fine. Let it ride, and it ran all the way up to the 145.5. So Apple's good. That'd also be a good swing trading pick too. Apple, like Kramer says, own it, don't trade it. Well, I trade it. I'm a trader, but I wouldn't mind owning it too up at new highs over at say 146. So Apple looks good. Take a bite out of Apple. Tasty. 2-day high breakout. That's a buy, right? What do you notice about the ranges on this, by the way? They are almost identical, right? The high-low range of the previous day is almost frequently sets the tone for the current day. So you can see Thursday's range was 140.6 to 144, about $3.50. The range yesterday was 142.5 to 145.60, just over $3. So just about the same range day over day. That's another thing to pay attention to. And to the earlier trader's point, if you say like two ATR stop, let's say you buy up here, your stop loss might be 2 of these guys. You kind of stack them here and here. Your stop is down there, and that also coincides with the 2-day lows. That's good. That'll play. Another good one that's on the radar and the watch list for next week is Coinbase. I called along yesterday for my members at, I think it was 248, something like that. Anyway, it ran up to 257, so that's good. It's in a nice continuous uptrend, and so if Bitcoin comes back into play, Coinbase is a good one. I like this now better than a Marathon and blockchain, so I like Coin, C-O-I-N. Again, day over day ranges are about the same, which is why it really helps if you use a 2-day chart, 2-day chart, 1 2-day, 1 2-day. Tells you what to trade and how to trade. Moxie had a big day on Thursday and only about half the range day, like I said it would on Friday yesterday. So it's still in play though, it's in an uptrend. We'll see if he breaks it north of the 31 next week as well. All right, you folks have some tickers for me. I'm going to assume that they're swing trades unless you've posted otherwise. Let's pull those up. Remember, what you want to trade is street traders that call rock star charts. A rock star chart, or the very best, nothing but the best. When in doubt, stay out. Play with the best charts only, right? Because there's so many great charts out there. Don't overtrade mediocre charts out of habit. I've done that in years past, and I've learned the hard way. It makes much more sense to focus on the current strongest charts, work with those because they have the best odds of continuing up. Let's see some tickers here. Let's pull these up, and if I miss it, sorry, just repost it. TLT. Range is crap. Not enough range. Hey Doug, QSI, let's take a look. QSI. No, that'll play actually, that's good. That's got range and it's got tight range. A recent buy, yeah, thanks, I like that one. That'll play over 14. I'll put that in my, I appreciate it because you guys help me get some charts to trade next week as well, in addition to what I'm already trading, so. Yeah, QSI, that'll play. 25 down to 8, and it's really strong pivot, pullback, but now it's got renewed strength the last 2 days. So Thursday and Friday, recent buying makes that a good candidate. That'll play. That's a good chart. Let's see, NEO. I've called this multiple times last week for day trading. Not good for swing trading, but NEO's great for day trading, but not so much for swings because it's not a strong enough pattern. Let's see. I got so many of you here, I'm going to try and fit in as many tickers as I can in the next few minutes. Yeah, CLOV was good. We called it, I don't recall when, it was earlier, within the last several weeks. CLOV, tradable more for intraday than swing trades. Let's see, 3D. type in your tickers. If you have something you'd like me to pull up, 3D is fine for day trading, but not for swings. By the way, some charts are ideal for, if you want to swing trade a chart, you don't trade a chart like this. Why on earth would you swing trade a chart like this when you got charts like, I don't know, like that instead? I mean, you want charts that look like this, 45-degree angle, straight line, like my beautiful Mont Blanc pen, right? 45-degree angle breakout. You don't want choppy charts. Don't stop trading choppy charts. Stop that, you wacky kids. You want charts that, or if you do trade offbeat charts, they got to have range and they got to have recent strength, which this one does. The cherry on top would be if the volume were spiking up higher. That would be the only missing ingredient from a recipe of a potential winning breakout in QSI. So if you're trading other than trending charts, they got to have big range and good volatility and volume and directional strength lately. It tells it's likely buy up in new highs. And not a great chart, but it's a really good one. Let's see, someone's asking about OKE. I got a lot of tickers here. Let me blaze through these quickly. OKE, do I like it or not? Nope, too fuzzy. It's got an okay range, but I'd like to get shaken out because I use $2 stops, so that would have shaken me out repeatedly. So not clean enough. The trend is great. If you're an investor, this is wonderful. You know, or a long-term active investor, it'd be fine over the 58. Personally, I would wait for it to get over 60. Not a trade recommendation. All information here is for educational use only. I'd wait for it to break 60 because it's getting close enough to the 9, and I never buy 9, so it's okay. Let's see, CRBP. That's a terrible chart. See, DFS. That really sucks. Too much pullback range. The depth of the pullbacks is too big. You got a 10 stick, right? A stick is street talk for dollar, right? So stick equals 1 point. You know, you got a 10 stick chop range on this thing, you're going to get killed trying to trade this. No. Bad chart. MYSC. And again, I'm not slamming on you guys. I'm trying to teach you the difference. And it's painstaking because this is one of the worst charts I've seen in recent history. So that's a terrible chart. MYSC totally sucks. How about Bank America? BAC. Well, that totally bites the big one. That's a horrible chart. Come on, people, ask it. We got a lot of new people here, and they're asking about horrible charts. That one's good. I'll give you that one. JCI is good. That'll play. So that's a good enough chart. That meets criteria. The range is decent from 50 to 70. Not great, but still decent. And the trend is unbroken and up. So yeah, JCI looks good. And if you're swing trading, you like charts like this, or like this, or like that. Charts that are tight, clean. You don't want charts that are choppy and sideways. I've trained tens of thousands of traders over the last 2 decades. And speaking in general, y'all overtrade choppy charts. Stop it. Use tighter risk management. You undertrade strong charts. You overtrade choppy charts. You don't trade enough. You trade too few. So you place, and I'm just speaking to the trading industry in general, not the industry, the retail trading community in general. What I found in working with tens of thousands of traders in my Vegas and California, New York, and Texas, and other seminars, and here in Colorado, is that y'all tend to place too big bets for your account size. You place too few of them, and to make things worse, you trade charts that suck. No wonder you're not making a fortune. You got to trade small, trade often, trade charts that are hot, scale in and position, size, and build the trade over time, and make sense out of it. All right, so wow, a lot of tickers. No one's asking me. Okay, let me blaze through these. Enough preaching, Calhoun. What do we got? Sava sucks. Oh, that's Save. Sava, I'm sorry, S-A-V-A. I use a little more professional wording. SAV had a major pullback. I would not be trading this. If I were long, I would sell it all if it loses 90. I'd personally, not a trading recommendation, I would use 122 for the earliest long trigger. And I would trade that because the range is beautiful, right? This guy's what, $5 to $100. So I gotta love that range. The money's out there, but not without treachery and pullback depth that's large. So you trade small share size north of the 122. But yeah, that's playable. That's good. DOCS. I'm going to try and get through these quickly here. Looks like a recent IBO, so we just say no. POIM, beautiful chart. I love that chart. That's a great chart. Now that's what I'm talking about. So good. Who asked about that one? That's from Polly. Okay, hey, Polly, good pick, man. It's a couple more IHRT and Cube. Well, I like this one. Let's see how the others look. IHRT, that'll play. That's an 8 chart. Range is beautiful. Trend is great. Thanks. I'll trade that myself. That's one I would trade myself because it's in the $15, $20, $30 share range. The trend is nothing but up. $2 stop would work on that. That would keep the trades alive for the most part. So yeah, I'll play with that over 21. Thanks. IHRT, good, even though it's in pullback territory. So, and because it's getting close to the 30, and not a trade recommendation, but I'd play this over 30.3, but I wouldn't touch it till then. But it's a good chart. That's tradable. That one passes. How about Cube? CUBE, Charlie. Beautiful chart. So you're 3 for 3. So congratulations, Polly. Those are great charts. I like all three. POIM, IHRT, and Cube. They'll all play. And again, this guy, remember, thou shalt not buy nines. So we're not gonna. I wouldn't trade it till it gets over 50. Echo. Stop. Echo, what time is it? Or don't answer. Echo, what time is it, please? Whatever, I couldn't hear that. Someone's asking about that. That's a terrible chart. Now, let's see, BCRX, BioCris Pharma, let's see. That's a horrible chart. Way too choppy. You're gonna get stopped out on that one there, son. NEE. That's a horrible chart, no trend. AMEH. That was good for a day trade. It was either yesterday or the day before. Now that's a beautiful chart. That's a wow chart. This one I covered for day traders. I didn't cover for swing trading. This one's a little too risky for swing trading because I won't say too risky, but you'd have to do really small share size because one bad day could be a $10 drop or $8 drop on this chart. So beautiful chart though. I love the strength. And what I like best about this chart is the height of the whole real body green candles in the upper right portion. We've got lots of large green up there. I would buy this after a pullback if it breaks out over 90. Yeah, it's a good chart. C. CSQ, and then American Express. Let's take a look. No, that sucks. AXP. Range isn't quite good enough. It's okay. For an active investor or an investor, this would be wonderful. I have no objection to American Amex over 177. But it's a little pricey for what you get. So, but this is definitely investor grade or long-term trader material. Let's see, NAVI, because the trend is good. It's a good chart. Not a great chart, but it's a good chart. That's a much better chart. I like this Navi. Thanks, John, for that one. NAVI looks good. And that's the kind that I would trade. This is a perfect setup chart like this. It's got a bullish cup breakout at the 20. This illustrates my don't buy nines strategy, because usually when you buy a 9, it runs into a brick wall at a decade value, and you can see a bearish engulfing at the 20. We always sell 9s. You never buy a 9 because you almost always get a pullback or chop at the multiple of 10 price region, right? So if you buy $10 or $12 a share, your exit target would be 18, 19 a share. This would be worth a shot again over, say, 20 points. Not a trade recommendation, but I might trade this one myself over 20.7, and that's NAVI. Thanks for the. I will make note of that in my own portfolio box here. So keep track of that one. That's a great chart, though. That'll play. That's good. You're going to wind up here soon. Just about 1 or 2 minutes left. You got three last tickers. So no more tickers, folks. Thanks to those who had asked. It's hard to read this PL or PINS. It's either PLNS or the text, and that's a terrible chart. JCOM. That's a nice looking chart for a $140 instrument. For active investors or longer term swing traders, this would be good. Not so much for short term trade. It'd be tough to get off. It's maybe an A- B+ chart. So it's a good chart. What I don't like though is that it's expensive. The range, it took 6 months to get $50 on this chart. So the range is not quite good enough, but it's an outstanding chart. Technical, good breakout. But from a profit and loss standpoint, the range isn't what I would want. If I'm paying that much per share, I want more range potential. Well, that's a terrible chart. INTT, too much pullback and shake. SPOF, and these are our last ones for the day. So I want to go back through some of them. Now, okay for a swing over 130. And last is Snapchat, which I remember when it was $15 a share. And that gets the award for the absolute worst chart of the day. So that one's terrible. Compare with that, or this, or that, or this. These are our winners. Winner, winner, chicken dinner, right? This is how you develop a good watch list for swing trades. Beautiful charts. And this one, if best fits my criteria for the type of price and range that I like. It doubled, almost doubled, I guess, from 11 to 20, and it's right under the 20, which is a key resistance area. So the next play would be where? Somewhere over, say, 20.5, 20.7. For a long-term trade, the exit would be up near, target would be up near 28, 29. For shorter-term trade, it may be good for 3 or 4 points. So anyway, great stuff. Thank you so much for being here. One and all, y'all have been wonderful to work with. I really appreciate your being part of the Trading Week Ahead broadcast. Now with a total number of people who have registered way the heck up at 6476. That makes for at least one of the more popular webinar series in the industry. I've been doing these for over a decade. Great to see you folks here. Do be sure to join my live room at Trading Open. You can get there by going to trademastery.com/live. So if you found today's commentary in the slightest bit helpful, I appreciate it. And I appreciate you for taking a little time out of your summer Saturday to join me on this broadcast. I love to see you there Monday through Friday with me, and more to come. So do join my live room. It's very intelligent, very friendly, very focused, very specific, and a great place to be. I've been running the room over 2 decades now. It's wow, since the year I've run the room since the year I founded Day Trading University in 99, and I started the live room a year later in the year 2000. So we're on our 21st or something like that year. So over two decades helping tens of thousands of traders. Do join me. I'll see you next time. Trade smart. Be safe out there. Be careful, and I will see y'all next time. Thanks so much for being here. Appreciate it. You too, Doug, man. And that was a good call on the 2x ATR. That's smart. I'll remember that one. That's brilliant. That's really good. So I like the 2x ATR. That's the kind of thinking. Doug's point about on a swing trade, how to set a stop. He said 2 times average true range for a stop loss. That's brilliant. That's what I want. That's the kind of thinking I want all of the entire industry, you guys, to think about. Range-based trading. And he used ATR. Now, I don't use the ATR indicator because I visually see the range. So I don't need a squiggly line to tell me if the range is increasing or decreasing. I just look at it, right? I'm a former statistician at Ford Motor Company, so I don't need any squiggly lines. But the 2x ATR, a really smart idea because it's based on ranges. What you want to trade, whether it's the range of, say, the depth of a cup. Let's say you're day trading and you're scalping, and someone has a 50-cent cup depth from the high of the cup to low of the cup and back. That tells you the depth of the next cup that's likely to occur. That's got a little tiny range. For swing traders, you may look at the weekly range or the daily range and use that to help formulate an intelligent, rules-based decision support plan for your entries and exits. So there should be a method to the madness, and hopefully I can teach you what I've learned at least in a couple decades. Thank you sincerely for being here, and thanks to all of you for stepping up and volunteering some smart ideas and some great tickers for us. I really like these, so y'all have been great. Thank you for being here. I think that'll wrap us up for today, so I'm out. You guys take care. Bye for now.